This is the Hacking Real Estate Podcast, episode 13.
Most accounting firms or local firms don't specialize in real estate or property management. So when they're getting different P&Ls or different reports, and God forbid, property management softwares, their owner statements do not tell you the whole picture, right? An owner statement is almost useless, right? You really need to be getting statement of cash flows, P&L, balance sheet, right? Like your standard sets of financials for your CPA or account to actually do anything meaningful. Otherwise, like an owner statement from AppFolio as an example, most of these, it literally is just cash in and cash out. What does that mean? Cash in, like that could be security deposit money.
Welcome to the Hacking Real Estate Podcast, where we dive into the stories of seasoned, hands on, and tech savvy real estate investors. We'll learn the strategies and tools they use to maximize returns and minimize hassle, all while navigating the rapidly changing real estate market. I'm your co host, Brandon Hall, and managing partner of Hall CPA, and I'm sitting alongside my co host, Vikas Gupta, CEO of Azebo. With our combined 15 years of experience in real estate investing and entrepreneurship, we're here to help you up your real estate game. Let's get hacking.
Hi, everyone. Welcome to the Hacking Real Estate Podcast. Today's guest is Taylor Hou. Taylor is the founder and chief happiness officer at APM Help, a company dedicated to empowering local property managers with enterprise-level tools and strategies. With a background shaped by growing up as the son of a realtor and property manager and CPA, Taylor never anticipated becoming a direct reflection of his parents' professional expertise. However, he now helps over 1,000 professionals nationwide in running their businesses more efficiently. When he's not revolutionizing the property management industry through APM Help, Taylor takes on the role of a dedicated tour guide for his 3 beautiful children, cherishing moments of family joy and exploring the world. Taylor, welcome to the show. In your own words, can you tell us a little bit about your real estate journey?
Yeah, absolutely. And I had no idea where you got this background. Did I type this? Uh, cool. Yeah, I guess my real estate journey, you kind of explained it. I grew up literally, I remember in middle school, right, going around in a little pickle truck with my dad, knocking on doors. Well, I didn't knock on doors, but my dad knocked on doors collecting rent, right? So this was definitely in the age pre ACH and everything, right? And I think the other distinct memory I had was, I live in Houston, especially right now in the summer, it is exorbitantly hot. Imagine, 120 degrees outside, but going up into an attic, right, and going to have to like replace water heaters at rental properties. That was my summer gig. And I mean, we didn't have any tools or tech to help us, and so it was like, draining water heaters, and that's not tankless back then, right? These are tanked water heaters, 50-gallon ones, hundreds of pounds, and like the hardest part is like trying to twist the water heater perfectly to fit down the staircase, the attic staircase, right? Like it was ridiculous. It was tons of sweat. I mean, I've been doing rental property stuff since middle school. But beyond that, I think the main thing is straight out of college, instead of going to a big oil and gas company, I was in supply chain management. That was kind of the thing for you to do. I ended up joining a small startup at the time called AppFolio. AppFolio no longer is obviously a small startup. And yeah, I was just customer support at that time, became a product expert and helped thousands of their customers, use AppFolio better.
Oh, wow. I didn't actually think I know that you were actually a handyman in middle school. So that's pretty incredible.
That's, family business, child labor, right?
That's the way you get the right margins, right? That off income statement labor cost.
Absolutely.
So how did you get from Appfolio to where you are today?
Look, I've been an entrepreneur all my life, I guess. I went to Appfolio, lasted 7 months before they fired me. And then essentially I bumped around. I did a completely unrelated startup, went to like 500 startups in the Valley. It was in like video production. Point was I was an entrepreneur, and then eventually moved back to Houston and got just started consulting prop techs. And we call them prop techs today, but obviously back then it's just like real estate startups kind of stuff. And then eventually actually was invited to join another prop tech for a very close friend of mine, and it was called Dynasty. And at the time, they were trying to do the stock market for real estate. And so you hear about like some startups like Arrived Homes and a bunch of people who are doing like fractional shares or securitizing, real estate or rental properties today. We were trying to do that before the crowdfunding bill passed. And so it was extremely difficult at the time. We had to get like a FINRA broker dealer license, all this kind of crazy stuff. And inevitably, we actually went from acquiring properties, securitizing them, essentially setting them up as an LLC that owns it, doing all that legwork, and then having, I guess, a Hong Kong investor effectively buy shares into that property. So effectively ownership from Hong Kong with a click of a button. It was amazing. We proved like there's demand, there was interesting demand here. Then not my decision, but effectively the startup then kind of pivoted to a different direction, which was actually something related to property management, which is leasing automation, right? So now we hear a ton about these leasing automation, leasing AIs. They were actually doing it before AI, obviously became this massive hyped up thing. This was way back in like essentially 2017, 2018. And essentially after a year of pivoting, they sold or were acquired by none other than Appfolio. And so that kind of brought me back into the Appfolio world. But while I was at this startup, my job was actually to find kind of like portfolios of rentals that were cash flowing rental properties, and ultimately like stabilize them and work with how do we manage these things, right? Because at the time, it's like you find a lot of these cash yields not in tier one, tier two cities. That tends to be your appreciation plays, right? You find the cash yield ones in suburb and non kind of the New York, San Francisco kind of places. And that was, again, that kind of threw me back into the property management world, having to work or, partner with local property managers. And you have to understand, right, as a regulated product, right, like we had to have clean financials. We had to have financials we could trust because we had to report those to shareholders of those properties. Well, we found out pretty quickly we couldn't trust anything these local property managers were giving us. Not because we couldn't trust them, but it was unfortunately because like most of them, they're not accountants. They're realtors, right? They're brokers. They want to help investors buy and sell properties. And inevitably when these investors ask like, well, I'm not in here, I'm not local. Like I need someone to manage this thing for me. And usually an investor will ask the broker, like, do you know a good property manager? Right? And I don't know about you guys, but I don't know if I can ever say or recommend a property manager, right? Like they typically aren't great. And a weird thing about the industry, obviously, I'm sure everyone's aware, it's just like most brokers and property managers have to have a broker's license. So if I'm a broker and I refer to another property manager, I'm effectively referring my investor client to a competitor, right? So there's tons of reasons why I shouldn't be referring, right? And so then hence the broker or your realtor who effectively helped you buy or represented you on that deal now turns into your accidental property manager. And so we were working with tons and tons of accidental property managers. They're not accountants. They don't actually know what they're doing. And you layer on top the fact that most of these are small mom and pop businesses, right? And they don't have the time nor the resources nor the knowledge, unfortunately, to know how to learn an Appfolio, a Buildium, a Propertyware, a Rent Manager. These are big ERPs. These are big accounting softwares. So long story short, realize there's a huge problem. If we ever want to truly unlock fractional ownership in real estate, like at scale, where it's truly like a stock market kind of thing, you have to have consistent financials. You got to have controls in place. Like that's a very long-winded way to say like we're currently, I wouldn't say like glorified accountants. We love what we do. We clean up the industry. We clean up the books. And hopefully we then help property managers become much better.
And so how did you make your way over to APM?
So I'm the founder of APM, and effectively after I left Dynasty, or we went our separate ways, I realized like if a dynasty or a future incarnation of a dynasty, where it's the stock market for real estate, really wants to achieve scale, they're going to have to rely on local property managers, right? You need the boots on the ground. AI, unfortunately, is never going to replace that person locally, and that person, at least right now, is still in charge of the finances. And so and it was kind of also a thing where this was early 2017. My wife was also like, Taylor, no more startups. We're pregnant with our first kid. You need to make some real freaking money, right? And so I kind of had this ultimatum of like, okay, I got to bring home some bacon, or I have to go get a real job at some big company, and my soul's gone, right? I lose my soul. So I kind of like the lowest hanging fruit for me was like property managers who used AppFolio who needed help cleaning up their books, right? Or they get hit with an audit, right? Which is all accounting related. And so then they would find me on Facebook, on LinkedIn. They're like, hey, I remember you. Like, what if we paid you, hourly to help us clean up the books? Like, AppFolio is not necessarily willing to help us do this because I really just need someone to do it for me, not kind of tell me how to do it. Like, I just don't have the time to actually figure this out. It's your pretty typical, I guess, founder kind of startup story of like, I was like, all right, pay me, right? And started at a $50 hourly rate. Now we're at $500 an hour for audit consultant, like consulting specifically. And we figured out pretty quickly as well. Yeah, again, very, very lucky. Most entrepreneur journeys, like there's a lot of luck involved too. Right place, right time. We had clients that unfortunately came back to us after I cleaned up the books and trained their people. And they were like, Taylor, we're back in the same spot. Our accountants were poached by a bigger firm, right? Or whatever, they retired, whatever reason, right? These are small mom and pop businesses. And so hence, they're like, we can't keep doing this, right? What if we just paid you to do our books for us? And Brandon, I mean, you're a CPA, right? Like you have a firm, like this happens a lot. We specialize not in the corporate books of a CPA, like of a property management company, but very, very specifically the trust accounting, properties accounting. And the easiest way to explain this is like a property management company typically will manage, let's say, 200 to 500 rental units. That's not one set of books. That's 200 sets of financials that you have to produce every single month, right? So of course, in the world of software makes this a lot easier, but you should probably have some level of accounting to be able to use these things appropriately. I think it maybe is a disservice to the industry, but the AppFolios, the buildings of the world kind of say like, oh, you don't need an accountant to use our software, right? But then on the other hand, right, it's like, but brokers who do property management are regulated, right, and can be audited. What are those audits? They're accounting. They're audit and trust compliance, and that's all accounting. Yeah, I don't actually know if I answered your question, but
No, it's all good. How big is APM today?
big or how big in what what metric?
How big is your team?
Okay, so I've got over 200 people.
Wow.
Yep. So I guess decently large now. Yeah, I mean, going to continue obviously growing, but I think right now, especially with the whole AI wave, that my job, I think my job is to maintain everyone that's currently here while capacity improves, right? But because we're leveraging AI to make everyone much, much more efficient.
If you own rental units but don't want to pay for expensive software, check out Azebo, the smarter way to manage your rental properties. With Azebo, you can automate rent collection, find quality renters, simplify accounting and tax prep, get a bank account designed for real estate investors, and save on rental property insurance. All of these services are free through Azebo. Join thousands of real estate investors who trust Azebo to manage their rental business in one convenient platform. Sign up today at azebo.com/HRE. That's AZIBO.com/HRE.
Yeah. We're seeing the same thing in the accounting space as well. It's the same sort of concept. Do you offshore any of your employees? Any of your employees offshore?
Yeah, so out of that 200, we've got about 50 or a quarter of them here based in the United States. And then the rest are, now granted, we have a good bit of engineers as well that are also global, but we do have a bit in like the Philippines, for example. So we see a lot of the real estate industry has, I wouldn't necessarily call it outsourcing, but they're leveraging VAs or remote assistants, right? In the Philippines and those places.
Yeah, it's really common these days. I know a lot of people maybe listening to this might be like, oh my gosh, you're offshore, but it's actually probably not. If we got a bunch of software engineers listening to this, they're probably very used to that. So yeah, but the CPA space at least has held out for a long time. I mean, firms have been doing it, but there's this like whole crowd that is very, very anti that. But now what's happened over the past 12 months is, well, what's happened over the past few years is the CPA shortage has just become astronomical. Like people are not graduating with accounting degrees. So what's happening is salaries have been pushed way up, and frankly, probably where they should be anyway on real terms if you look at the past 2 decades. But now it's like really putting a squeeze on firms, and firms are starting to look at outsourced options. But we offshore too. We offshore in the Philippines and India, and it's amazing. I mean, you can provide great lives for those folks while simultaneously being able to provide better service and higher efficiencies for your clients. So
Absolutely. And usually I'd say like there's top two questions that people will ask us in general because everyone's thinking about it. And I don't want to discount how hard it is to make the first leap, right? Like that first hire is the hardest hire, and it is absolutely difficult. Obviously, like we got very lucky, right? We posted on like onlinejobs.ph, found one person or two. Those two people are still with me today, even 6 years in. One of them, bless her heart, her name's Blushy. I'll give Blushy a shout out if she ever hears this. But like she helped me go from her and one other person to 150, and she led that charge, right? So I got again exorbitantly lucky to have like my first hire actually was able to help us like scale that team.
My first outsourced hire or offshore hire was also in the Philippines, and you talk about like making that first jump. This is what we talk about with our clients too, because it's like, yeah, you could totally go and do it, but let's tell you the story about when Brandon did it 3 times and failed every single time. Because I remember that first time I did it, I was just like, oh, it's just like anybody, they have an accounting background, they'll be fine. You hire them, you go, okay, here's 3 days of training, you got it, good, and then you review the books, and you're like, why are you booking Lowe's to food costs? Like that's not this Lowe's Home Improvement, not Lowe's grocery store, and they're just not. But anyway, so what we do now is we have this entire guidebook for them, and it's full of videos and full of written content that's very easily searchable and indexed and everything, and that was the unlock for us with the offshore team. So, but that takes a lot of time to put together, right?
Oh no, absolutely. Because like we're still in the mode of like we're still doing cohorts and then we do trainings. And realistically for us, because we're also not just your typical accounting per se, like we're very client oriented. It's trust accounting. It's a little bit different. I mean, yeah, we have a 3 month process of training initially. They've got to be able to pass that, obviously. And then beyond that, even just going from you're the behind the scenes bookkeeper to let's have you actually do client facing stuff. Oh man, that's a whole nother jump as well.
Absolutely.
The lives that we're able to support, it's fantastic. Obviously, a lot of people are like, "Oh, but you're paying them so little." It's like, a lot of times we're paying more than doctor wages over there.
You would be shocked. Yeah.
They live better lives than I do here, right?
Don't bring that up on Twitter though.
Yeah.
Yeah, yeah, yeah.
Yeah, no, it's good. It's a good business model, and now AI is coming in. It's going to make everything. It's going to make everybody more effective. It's going to expand everybody's ability to work on more things or higher level things, which is just great for everybody, and in my opinion. So Taylor, kind of shifting gears a little bit, do you have a real estate portfolio?
So I do, but I don't know how old I look, but I'm 30. How old am I? 30. I'm 34 right now.
That sounds pretty old if you can't remember your age. I'm just
Yeah, fair. I don't know, what typical size of real estate portfolio people, when they're 34 have. I think my story is, my first townhouse that I bought downtown Houston, right? Like that was my primary residence for like 3, 4 years. And then during COVID, like was able to effectively move to the suburbs, but then I turned that into a rental. So you're pretty typical, like got a fantastic sub 3% 30-year fixed rates. Obviously, we're benefiting from this, but I also got into a market pretty early. So that's one. And then, the real estate that I personally own tend to be related to, so I happen to own property management companies myself as well.
oh cool.
And so in a lot of states like Colorado, as an example, to be a licensed like property manager, you have to unfortunately have a brick and mortar address. And so like I kind of use that as an excuse to be like, okay, let me go, acquire a property, like actually buy investment property where my team actually is. And so, there's obviously a lot of tax advantages to doing that as well. And so yeah, so I have two other properties. One is wholly owned up in Oregon, and the other one is actually a little mini partnership with some friends.
So on the property management businesses, talk to us about that. Like what made you get into it? And do you own a majority stake, or are you like kind of like a passive investor in these businesses?
Yeah, sure. So, this was actually something that I would never have thought I would do. Let's just put it that way. In the course of my primary business, which is APM Help, we're cleaning up property management company books. We're trying to get them to pass an audit. We're trying to make them better. But a lot of times there was kind of two scenarios that would happen. One, they'd come to us too late. they're already on a suspended license, unfortunately. They've been through an audit, they failed it or didn't pass, and they put on a suspended broker's license, and then like usually a year and maybe a year to 18 months later, they come back for a follow-up audit. And on the follow-up audit, what's really actually happening is they're trying to see, did you fix the things that we caught earlier? And if not, we're revoking that license. In certain situations when that happens, it's a very abrupt, your license is ending in like tomorrow, right? And in those situations, it's a fire sale, but it's even worse than a fire sale because it's not like there's a liquid market of like property management companies being sold. Like this is not like stock where you can just buy and sell it, right? And so in those situations, the people who end up getting hurt obviously tend to be the employees of those companies, but also the renters, right? The renters and the landlords that have entrusted the property management company to manage those properties. It's a really jarring experience to like one day just get like this notice like your management company shut down. And sometimes a lot of times it's like from the regulator that says this is a, you know, license suspension. They are no longer operating. And you kind of like left holding like, well, what do I do? Where do I send my rent? The owners are like, well, who's going to manage my property? So in those kinds of situations, we've been able to, effectively have a playbook to come in and kind of white knight, like take over, stabilize it again, and of course, like make sure all those violations or all the issues that were there are no longer there, and get them to the point where like it's stabilized, everyone's happy, and we have not impacted like the community, right? Consumers who are the renters, and of course the owners. So I've done that a couple times, and then other ones tend to be also, these are small mom and pops. I'm pretty sure everyone, right, like understands like, you build kind of these businesses, you build a real estate investment portfolio. One day you're gonna die, right? One day it's gonna all come to an end. And usually most people are like, well, I'm gonna pass it on to the next generation. With real estate, that tends to be a little bit easier, right? Because real estate doesn't come with employees and feelings, right? Like you're passing along an asset. A management company, on the other hand, I don't know about you guys, but like, if you grew up in property management, you probably want nothing to do with property management, especially like running a management company and dealing with all those issues. And so we saw multiple times where essentially a lot of property managers, like they've been in it for 30, 40, 50 years. They're still running it because their kids just don't want to run it. And so you kind of see two examples where like it's kind of forcefully handed down to the kids, and the kids are like, I don't want to deal with this. And so then just things start unraveling. Or you see a management company sold to a competitor that's typically a real estate broker that sees property management as, oh, that's 200 rental units. That's 200 commissions that I can get, right? They see it as leads. They don't understand that when you manage properties, there are a bunch of other regulations and things you have to do to make sure you're running these properties well, right? And so then you end up, I don't know about you guys, but if you see a bank account with, let's say, $500,000 in it, and yeah, like that $500,000 is security deposits, but you also happen to realize after, having access to the bank account, like the balance never really goes down. Like it's always like 500,000, then like 480, and then 500,000 again. Like, nobody's really using the 480,000 that just kind of sits in there, right? And so unfortunately, we've seen too many times where people who don't actually understand the business of property management and the regulations come in, see a lot of money sitting there, and then go and buy a boat with that money. and that obviously becomes a problem. Our mission, right, at APM Help is to clean up the industry, try to make it better, right? Obviously, when we kind of see these things happening, we're just like, how can we prevent this? And so long story short, we've kind of had some opportunities to come in, when we realize an owner needs an exit, right? We'll kind of come in, put our hat in the ring and say, hey, maybe if you guys are interested, we'll do something. Now, technically, I've not officially done it under APM Help. I've done it under a separate company. I am a majority shareholder in that company.
I want to come back to a lot of what you said, but there's one thing in specific. So you were talking about how, right, a property manager can get into trouble, and then they may just have to, their license gets revoked and they have to, dispose of, or the business has to go away immediately. So for me, not in the property management business, but thinking about it from like the landlord side, like that sounds like a nightmare scenario. So for our audience who might be worried about their property managers or might be looking for a property manager? Like what is the diligence they should be doing? What are the top things they should be looking at? And like what are the red flags that they should watch out for?
Fantastic question. I don't know if this is a leading question or not, but I appreciate it. My answers are always they're typically going to be accounting related because that's what we specialize in. But I can tell you right out of the gates, for example, if I was an owner and I was evaluating a property manager, one of the first questions I'd be asking is, when do you send distributions? Right? And there's not technically a real answer here or a right answer. It's more so how they respond. I'll give you an example of how they could respond. One could say, oh, we're going to send you a distribution on the 10th, no matter what. I would say there's a red flag there if they say that. Another one, which realistically is probably the most realistic answer, is we actually have no control over when we send distributions, right? We're kind of beholden to when rent is paid. So once rent is paid and it's finally cleared our bank, then we try our best to not hold on to your money. We're going to send a distribution as quickly as we can. Okay. And usually that revolves around some kind of cycle, right? So it's going to be as close to, let's say, the soonest Friday, let's say, of the month. Okay. And then now you have some interesting new solutions that have come out where it's like these property managers have, and we offer a solution like this where we're actually guaranteeing a rent roll for a property manager to enable them to actually make distributions on time consistently every single month, right? So those are really, really innovative and really, really new. But realistically, just timing on distributions, timing on certain things can really help you understand like how truly does this property manager understand what they're doing and what the limitations are. And I'll go back to that red flag I was talking about earlier. Unfortunately, a lot of times what we hear or see is someone who's like saying, I will guarantee you your distributions will be sent on the 10th, let's just say, or the 5th of every month. What we tend to see in those situations is they're actually borrowing other owners' money to front you your rent or your distribution. Property management companies, they're not liquid. It's not like they have $1 million in the bank that they can just keep fronting money on, right? So inevitably what ends up happening is they're guaranteeing it by essentially dipping into security deposits to essentially guarantee that your distribution's sent. And that is absolutely highly illegal.
Got it. So one red flag, big red flag, if they guarantee rent distribution date. What's another one I should be looking out for?
So specific now, this is one not necessarily one you can do before you pick a PM, but like if you're working with a PM and this happens to you, these are typically reasons why people will change or start looking elsewhere. If they ever bounce your distribution, if they bounce a check, that's a problem. Realistically, if I was an owner, I'd be asking for monthly financials. And if they cannot produce you monthly financials on a timely basis every month, that probably means they're not even doing a bank rec, right? I'm sure Brandon is well aware of how difficult it is to do a bank rec on a timely basis, right? Regardless, it doesn't matter what company or what business. Bank recs tend to be the last thing on anyone's minds. But at least in our world, we see it as it's the most important thing to be doing because if you can't reconcile the books, nothing else matters, right? The accounting, I can give you $1 million in income with a journal entry. Doesn't mean it actually happened.
It constantly shocks me how many accountants just don't reconcile to the bank at all, like ever. Because when you start doing that, you start seeing the journal entries, you start seeing duplicate payments where the software messed up or, oh, our bank connection failed, so reconnect it, and now we've got 30 days of duplicates that we're not reconciling out. It's pretty wild. But that's the ultimate form of accountability too. It's just like that's your ultimate matching to make sure that whatever you're putting on that P&L actually happened.
Yep. For what it's worth, right? Like we try to lead the charge for our industry, and we do daily bank recs. Literally every single day, we have a team and a department and software that goes in, looks at the bank transactions, and clears off the transactions in your software, right? If something's not matching, you betcha we're going to send the PM, we're going to send your property manager, hey, here's a discrepancy, like, why is this not in the software? Or, hey, did you realize that, you actually left off a digit, right? Or a zero, but again, like, the reason, quite frankly, why we do daily bank recs as well is like, if you do it monthly, right, like, property managers are busy. Imagine you do it monthly, and guess what? At the end of the month when the statement hits, it's rent week. Rent week's one of the busiest weeks for a property manager, right? So they're not going to get the bank rec done in rent week. So now you're really actually talking about 40, 45 days out. And 45 days out, if you had a discrepancy on the first of the prior month, are you going to remember? Right? Like now you're spending extra time trying to dig up and figure out like what this transaction was. And we're not even talking about having multiple team members, right? Like we're just talking about you. So it's a sore topic for us. I'm sure Brandon can relate. Yeah, I mean, so fundamentally going back to like other things that you should be looking out for, like if they cannot produce you financials, like if you ask for it and they don't just go into their software, run a report and send it to you, I would say there's a flag there. They should be able to do something like that, especially if the month has been closed out. If we're sitting on the second day of the new month and you're asking for the prior month, okay, fine. Maybe realistically they're not done yet. But let's just say, worst case, right? You're in the second month, right? We're in July 1 and you're asking for May. That, no question, they should be able to give you May financials.
And how long do you like let these issues go before you terminate and move to another property manager?
I think that unfortunately depends on where your properties are.
Right, because if you're in a tertiary market, how many options do you have?
Exactly. So that tends to be, that's why I would say like, yeah. Look, if you're in tier one market, you should be looking the second they're not able to respond, right? But if you're in, again, a tertiary market, right, you really only got like one or two options. Unfortunately, those other options probably aren't even that good either, right? So it's definitely really tough. And that tends to be, one of the things like we would suggest in that situation, shameless plug, is like those property managers need help. They should really be, as an owner, I'd be pushing them to say, hey, like you need help. Why don't you go research, just Google, experts, right? Go Google some property accountant experts and see if they're willing to help you.
So I have a 3-unit property in a tertiary market, Hickory, North Carolina. Used to be furniture capital of the world until China started building all the furniture. So everybody left Hickory. But a lot of the property managers in that market are, and I guess, I haven't used all of them, but I've used a couple. I don't even know they know what software is. Like, it's just fascinating. It's like you have to be the software person. And, but luckily, we work with an amazing property manager now. They're from Charlotte, and they acquired a property management firm in Hickory. So they expanded into Hickory, and they use AppFolio. And I'm like sitting here like taking notes because I'm like, oh yeah, my guy, he checks that, he checks that, he checks that. We're good. We are solid.
So Hickory reminds me, what do you mind sharing? What is this property manager's name?
It's Scarlet Properties.
Scarlet Properties. Okay, okay, okay. All right.
They're actually great. And if you are investing in Hickory, Charlotte, you should use them because they're great.
Yeah, very good. I'll give you one more tidbit when it comes to accounting or financials with property managers. If you ever see, because unfortunately this happens, especially with AppFolio property managers, if you see a beginning balance and an ending balance not match when they give you different statements or different cycles, there's a big problem. I think a lot of people don't understand this, but property managers, they make money from you, the landlord, right? They make money obviously collecting rent, but really their customer is you. And look, I'm in the property management world. There are literally classes and courses on fee maximization, right? Like how do I maximize the revenue per door that I manage, right? And so you kind of have to understand from the property manager standpoint, right? They understand this, or most of them do. And so, late fees, app fees, like move-in fees, right? Like all these kinds of fees, you as the landlord probably are none the wiser. You probably have no idea that they're charging your tenants or your properties these fees. But in reality, those are fees that the property manager is going to make. So I would say just when you're evaluating PMs as well, the typical, fee structure is like 8 to 12%, right? If you're looking at pricing and you're shopping and you see like, ooh, this one's flat fee, it's $79 a month, right? Like I guarantee you they are making it up elsewhere, right? Like you absolutely pay for what you get in this industry. And I would say you absolutely want your property manager to be incentivized to benefit you. Like the more rent they collect, they get paid more. Don't let them do a flat fee thing because if you're doing flat fee, they're going to be charged. You're the one who's paying for their profit. I guarantee it.
You said look for if the beginning balance and ending balance on different statements don't reconcile or don't tie, and then you talked about different fees they could be charging. So is the mismatch in the beginning and ending balances indicative of fees that they're charging, or are those and if so, like how do I identify that?
Yeah, so that specific issue has to do with what's called suppressed fees. Suppressed fees are fees or income that are pass-throughs from the property back to the property manager. And many times they'll essentially it's a mismatch. What's happening is like in 1 month, like they collected it, but then in the next month maybe they refund or they over collected it. There's some mismatch that happened. And so when they rerun or run the statement for the next cycle, something happened that they changed the past on. So hence your beginning balance is no longer going to match the ending balance they sent you previously. That kind of stuff happens a lot. Yeah, it's the bane of like Brandon and his company's existences, right? When he gets, financial statements that aren't matching, he's like, "What happened? How can the history change?"
Oh my God, it happens so it's like it's every month because you're totally right. So you go through because here's what happens, right? Property managers they cut you a check and it hits your bank account, but the check's $6,000. And so the question is, how did we get the $6,000? What is everything that went into $6,000? Now I had to go look at the property management statement, and if you're on like a 20 unit property, it's a lot of work to go and split out the $6,000 because now I got to go and figure out what were all the rents collected on all the 20 units. What were the utilities? What were the repairs? And I've got to go and basically go into QuickBooks, split, add all that stuff up, and then the net amount is $6,000, right? So that's how we know. But then the next month, it's like, well, wait a second, things aren't matching up, right? We've got a beginning balance. The classic one, this is how we always find out. The classic one is we always look at the I don't remember the report in Appfolio. It's basically a rent roll that shows how many times the person has been late and what their outstanding balance is.
So like probably a delinquency report or something like that. But yeah.
Yeah. Thank you. Yeah. And so that one always wigs us out because in this 1 month you'll see Joe Schmo has $600 outstanding, and then next month you see Joe Schmo has $483 outstanding, and you're like, what the hell? How did? And then you go through the report and you're like, okay, I don't see any payments from Joe Schmo, so how did Joe Schmo's like where did they get reduced? And then they're like, oh well, we applied some of the security deposit. And you're like, what in the world?
Yeah, we applied something, we adjusted the charge. No, and Brandon, you reminded me because like my firm, we actually attempted to do bookkeeping for like landlords who had multiple property managers reporting to them. So we were in QuickBooks Online. And we did not realize how difficult it was to bookkeep for a landlord, right? Especially like property managers have different time state. Like one will send you distributions and reports on the 10th, the other will do it on the 15th, this one will do it on the 30th, right? And then on top of that one thing, that $6,000 distribution you got, let me make this very clear for you guys, that is not income. That is also unfortunately not always net either. Your distribution is just what your property manager happens to want to send to you, right? They could be holding on to more money as well, right? So don't think, because a lot of times people are like, oh, well, that's like when it comes to 1099s, right? Year-end reporting and tax filing, like they're like, well, I got this amount in my bank. Wait, why are you telling me my income is this amount more? Right? It was like, okay, well, again, the amount that hits your bank is not income. That's the distribution amount, right? Or that's your disbursement. That's your owner payment. That is not the income you collected minus the expenses, right? And yeah, so
And it's very challenging. You're absolutely correct. If you are doing the accounting at the landlord level, it's hard to do. And to Azebo's credit, since this is an Azebo podcast, that is what they are trying to help solve, which is awesome because you need that. But even at a certain point of scale, when you start outsourcing that to some accounting firm, man, that's tough.
well, and no offense to the Brandon Hall CPAs of the world, but most accounting firms or local firms don't specialize in real estate or property management. So when they're getting different P&Ls or different reports, and God forbid, property management softwares, their owner statements do not tell you the whole picture, right? An owner statement is almost useless, right? You really need to be getting statement of cash flows, P&L, balance sheet, right? Like your standard sets of financials for your CPA or account to actually do anything meaningful. Otherwise, like an owner statement from AppFolio as an example, most of these, it literally is just cash in and cash out. What does that mean? Cash in, like that could be security deposit money.
Exactly. Sometimes we're just transferring our security deposit over. And
Yeah. Yeah, they're just transferring in and out security deposits, and owners are like, wait, that's income. And I was like, no, 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 no. That's the property manager collecting a deposit and then transferring it because they forget. They're transferred it 6 months later to the security deposit account. Like all these kinds of things, like property-based or property management accounting, real estate accounting, it is hard, right? Especially when you have different softwares and people who don't understand accounting trying to figure this stuff out, right? Let alone local CPAs who are accountants trying to figure this out. It is just extremely difficult. Hence why you hire experts.
It sounds like if I'm in the market for a property manager, the first question I should be asking them is, do you use APM Help?
I'd love that one day.
So, Taylor, I have to ask, you've said a lot about AppFolio so far. Is there anything else that you'd like to say about them or other PMSs in general?
I should note very quickly, we love AppFolio. I only, my personal experience has been primarily with AppFolio, right? I used to work there. My first, arguably hundreds of customers were all AppFolio customers, and so AppFolio is what we live, breathe, eat every single day. But I should note, like, all the problems, let's say, that I had maybe mentioned with AppFolio, these are problems in general that exist with all of the PM softwares, right? It's not limited to just AppFolio. Now, they may not be the exact same issues, but they all have their quirks and they all have their issues. And usually I would say almost the number one question people will ask us is like, what's the best software? What should we use? And I almost always now will respond with, it's the best software to use is whichever software you're already currently using. Right? Like, unless you're coming from, let's say, QuickBooks or spreadsheets, fine. There are absolutely better alternatives. But if you're already on Buildium or you're already on AppFolio, realistically, those softwares, they're all feature parity pretty much between each other, right? And so what you should really be thinking about doing is cleaning those up, cleaning up that database, and then really investing the time with yourself and your staff to actually learn those softwares. And that's really hard. Don't get me wrong. That's a really hard thing to do, and that ultimately is why most people have a lot of these problems with these softwares, right? It's because the unfamiliarity with these systems, it's akin to, like, let's say moving from Windows to a Mac or Android to an iPhone, right? Like, there's always going to be differences, and if you don't actually invest the time to learn them, you're probably just, on your phone, you're just going to be using messages and phone calls, right? And the apps that you already use, and you may not necessarily fully take advantage of everything that new, let's say, software or hardware is going to give.
As in pretty much everything, software is not the magic wand, right? You actually have to implement it properly, use it properly, and train your folks to use it properly. And if you put the right information in and you set it up properly, you're going to get a lot more out of it than if you just sort of try and make it work on the fly.
A fair jab for all the PM softwares is they all tend to say, if you switch to us, all your problems go away. Let's be realistic. Realistically, these are massive, big ERP or enterprise resource planning softwares. Like, everything to run your management company gets put into these softwares. I hope anybody listening to the pod of these audiences, anyone in property management real estate, like, you invest the time to actually learn those softwares.
Taylor, if you don't mind, if we can go into our 3 closing questions.
Absolutely.
All right. Sounds good. So question number 1, what is your favorite book? And it doesn't have to be real estate related.
There's this book called High Growth Handbook, and I'm sure you can find this on Amazon, but effectively it's like, if you're building a startup or doing anything related to startups, they kind of lay out the playbook, but also, like, giving context at different stages along your journey. And it's like, at this point, you don't need to worry about a CFO, right? And, like, at this point, here are the things that you need to look out for. So I reference this book a lot. It's on my shelf right behind me. I don't know if it's a favorite book, but this is the only book that I actually open occasionally. So, yeah.
That's a great one. I have that on my Kindle bookshelf. I love it. Well, great. Well, question number 2, from your perspective in real estate, what's more important to you, appreciation or cash flow?
I'll answer a little bit roundabout in the way that like I think people need to understand that most investment properties aren't going to do both. You have to kind of understand which bucket you want, right? Do you care about cash flow, which tends to be like you actually want the cash for income, or are you wealthy enough to wait for the appreciation, so the eventual sale and get the capital gains on appreciation? So whenever I hear people come to me and like, oh, well, let's invest in this property, it's like it's gonna pay the mortgage and it's gonna appreciate. I'm like, sure, maybe, right? But like, what are you really, like, let's kind of focus on one strategy and really go deep on that. So it's not necessarily saying I don't, I personally don't care which one. I just want to know very clearly which strategy we're going for, which property we're investing in. Is this a cash flow property or is this an appreciation property? Because there are tons of different I wouldn't say consequences, but different tax strategies when they're different. So yeah.
Yeah. Yeah, I think that's certainly, I think, one of the themes that I've been stitching together in my head across all the various episodes that we've done is there may not necessarily be a right way to do this, but the wrong way to do this is if your investment doesn't match your strategy. And then our final question is, more of an open question. What is one final piece of advice that we didn't get to touch on that you want to leave our audience with?
I think this is more relevant recently to me, especially like macroeconomic times and things like that. I have a lot of doctor friends and lawyer friends who like send me syndication deals and they're like, "Oh, this is gonna be amazing," and blah blah blah. Like I would kind of just say in general, right? Like, I think all of us in real estate understand like if it's a listed property, it's probably not the best deal anymore, right? In certain situations, but then beyond that, like if I studied to be a doctor and now I'm running syndications, like no offense to the doctors that do very well, but like they're great at marketing. I don't know how great they are at evaluating rental properties or big multifamily assets, right? And for what it's worth, I'm pretty sure the vast majority of the assets that are coming crashing down right now, right early on, tend to be the syndicated deals that they were pretty slim margins to begin with, right? It was, definitely long shots. So just be careful out there, right? Especially in the short-term world. Oh, very recently I had a meal. Someone was like, "Oh, I want to invest in short-term right now." I was like, "Right now you want to invest in short-term? Like maybe 5 years ago, short-term was probably you could make some good, decent money, but like now, like short-term kind of feels a little bit like timeshares again." Right? Like like who's really making the money in short term? I'd almost feel like it's the people who are putting those deals together and the managers, right? Like the managers are making like 18% on your money, right? Yeah. So,
That's great. That one of my closest friends is a doctor from childhood friend. I think a week or two ago he was messaging me and he's like, "Have you heard about real estate syndication?" One of my coworkers has been saying he's been making 12% a year, 15% a year in syndication. How do I get in on this? It's like, oh, make sure you know what you're doing before you send your money to someone.
yeah. And yeah, those are just that's a whole nother episode in and of itself. So, someone's going to be holding the bag, that's for sure.
Well, listen, this has been a fantastic episode. Lots of great content. Taylor, thank you so much for being on the show.
Thanks for having me. Thanks for inviting.